Hey guys, it's Arab the Plug again, and you are welcome back to my YouTube channel. And in this video, I'll be talking about how to do futures trading on OKX exchange. I previously did a video on how to do spot trading on OKX exchange, just in case you need to learn how to do spot trading on OKX exchange. Ensure you watch that. And also, on this channel, I post videos on crypto trading every week. So ensure you subscribe to my YouTube channel if you're interested in learning how to scale up your crypto trading journey and how to make money from crypto. And also hit the like button so that this video gets to as many people as possible so that they can also benefit from the content. So let's get right into the content of today. So this video will be talking about how to do futures trading on OKX exchange, and this is the OKX exchange interface. Once you log in on your mobile device, you have this page to yourself on OKX. So you would have to click on the icon on the top left side of your screen right here, and once you click on it, you have this page. So you scroll down and see trade, then you click on futures, since it is futures you want to do. So you click on futures, and once you click on futures, it's going to take you to the futures trading interface or platform right here. So now this is futures trading interface. But before we start trading futures, let me give you a brief explanation of what futures trading is in 2 minutes. Futures trading is a kind of trading where price of assets are not traded on the spot or not traded in a spot market, but they are traded based on a future predetermined price, which means you are not actually buying or selling an asset. You are just making a kind of prediction in the market on whether an asset is going to go long or short, and you make money or lose money with the movement of the market. So let me explain the term long and short. Long means you are predicting that the market is going to go up. So if you are trading BTC on futures trading and you take a long trade, so you are telling us that you predict from your analysis that the market is going to move in the upward direction. And if the market does that, you start making money. And if the market does not do that, then you start losing money. Also, futures trading has something we call the leverage. Leverage is a kind of borrowed money that your exchange borrows you to be able to amplify your trade and give you access to trade a large amount of capital in futures trading. So if you use the 10x leverage, it means you have your margin, which is like the amount you use to enter a trade, is what we call margin. Your margin will be multiplied by 10, and you have access to, if your margin is $10, for example, and you use 10x leverage, for example, it means you are trading capital worth $100. And if you are trading 50x, it means you are trading capital worth $500. So leverage is the kind of borrowed money that your exchange gives you so that you can amplify your trade and make more money. But it is a double-edged sword, which means if you use it in the wrong way, if you over leverage, you might lose a lot of money as well. So in futures trading, you can also predict short or take a short trade, which means you are predicting that the market is going to come down in the downward direction. Let's say BTC is at 67k now, and you are predicting that the market is going to drop in price, and you take a short trade. So if the market drops, eventually you make money, and if it does not and it starts rising, then you are losing money. So that is what futures trading simply means. So futures trading has some elements like the leverage, the borrowed money. We have the margin, which is the capital you are using to enter a particular trade in the futures market. We have the liquidation price, which means that if the trade starts going against you, there is a particular price where you would be stopped out. The liquidation price will be set by your exchange, and once the price gets to that liquidation price, you will lose your margin. Your margin, is the amount of money you use to enter that particular trade. Those are the elements you need to understand in futures trading. So now let's talk about how to do the futures trading on OKX. So now we have the futures trading interface right on your screen, and you have where we see BTC USDT perpetual, which is like on the top right side of the screen. So you just click on it. You might want to change it to something else, but for me, so if you want to trade any other thing, maybe bonk, you can trade it. You can just select bonk USDT perpetual. If you want to trade something different, you can trade it, but for the sake of the video, we'll be going with BTC. Then below it, we have where we have isolated. This is where you select your margin. So we have two types of margin mode. The first one is the cross margin, and the second one is isolated margin. Cross margin simply means margin and P&L are shared across position. You may lose all your position if liquidation occurs. It means that if you have like $500 in your capital and you have different positions, a position means a particular trade you have taken that is currently running. So if you have a position running and you have some balance, let's say you have $500 in your futures trading account or your trading account, and you enter a position with $100 and you have some $400 left, and let's say the price approaches your liquidation price, which means you are soon to be liquidated out of the market, your exchange could take some part of the remaining balance in your account to fill in for you in your trade so that the trade can continue and you have a new liquidation price. So that means cross margin, which means the exchange would cross into your margin on your balance to fill in your margin if the trade is going around your liquidation price. So I don't usually use it, and I don't usually advise beginner traders to use that. And we have isolated margin, which means the amount of margin used to enter that trade will be isolated, and once you lose it, then the market will not cross into your balance to take any other money from it. So I select isolated margin, then I select leverage. Leverage is is a kind of borrowed money. For Bitcoin, you can select up to 100x leverage, which means 100 times you have capital worth, 100 times the amount you are using to enter that particular trade you are taking. So let's say you are taking a trade with $50 and you are using 100x leverage. It means you have access to capital worth $5,000 in that trade. So leverage helps you amplify your trade. It helps you make more money. But if it is misused, if it is overused, then it exposes you to a lot of risk. So most of the time I choose 10x leverage or more, depending on the kind of trading I'm doing. So for long, the green one is for long, the red one is for short. So you select the leverage you want to use for both, whether you are longing or shorting. So after selecting that, then you select the order type, which is usually the market order for me. Sometimes I use limit order too. Market order simply means you are entering the market at the current available price in the market. Limit order simply means you want to enter the market at the price that the market has not reached. So let's say you want to enter a long for BTC at 66,000. Market has passed that price, but you feel the market will still drop back rate before moving up. You can put a 66,000 limit price, select some part of your balance to enter the trade and open long. Once you do this, a open order will be opened, which means that the order has been created and is going to be filled. It's going to become a running market order when price reaches that $66,000. That is limit order. But for market order, it means you are buying at the available market price. So let's take a long trade with a market order. So this is BTC USDT perpetual futures trading. We are taking a long trade at a market order, using the market price. Then I want to enter the amount I want to use to enter that trade. So I'm going in with like 20% of my capital, right? Then I'll take a long trade. So once I open long, it's going to tell me to confirm. Open long, 10x leverage, order price, fine, opened. So once I open the trade, okay, it says I don't have enough balance. Let me cancel this one. So let's open a long trade. So I open a long trade. Once I open it, you see that the trade is in positions. So it means an open position. So when you see the position, you see that the trade is running. You see PNL USDT, which is profit I'm making in USDT, and PNL in percentage, which is the profit I'm making in percentage. So, and you see some element of the trade. You see the size of the trade. It is 0.01 BTC. You see the margin. The margin is the amount of capital I used to open the trade, which is $67. You see the margin level, which is 2000%. Liquidation price, which is the price by which once the market gets to that price, I will lose my margin because it has gone against me for a long time. Imagine open the trade at 67,000 and it goes to 60,000. You get, that is a lot of loss. So that is liquidation price. Entry price is the exact price where I enter the market. Mark price is the current price in the market, which means the current price in the market is lower than the mark price, the entry price. That is why I'm losing money. You get. So you can also set your take profit and stop loss by clicking on TPSL. Just click on it and you'll be able to set your take profit and stop loss using this box. Also, you can close the trade by clicking close, and you can close all. You can close a part of the trade or maybe reduce your margin by clicking close. You can set the price you want to close it, or you reduce the margin, and you can close all by just clicking close all, and all the trade will be closed with your profit or your loss. Also, you can open a short trade too. If you want to short the market, just click on short. Open the trade by selecting the amount of BTC you want to use to enter the trade, then open short. Once you open short, a short trade will be opened for you, and you'll be able to see the progress of the trade, the profit and the losses, and every other thing. So you can also close the trade, set TP, and all those things. So this is how to trade futures on OKX. It's simple, straightforward, and easy. Also, you can analyze the market by clicking on this box where the arrow is showing. Once you click on it, it's going to take you to the analysis page where you can look at the chart, use different price action strategies, indicators, and any other thing you use to analyze your chart. You can see the order book, you can see the last trade, trading rules, and every other details right here. So that is how to trade futures on OKX. I hope you got value from this. Ensure you subscribe, hit the like button, and I will see you in the next one.